Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 166 of the AJ Brown Show. My name is Cyprian Francis. AJ Brown, good morning. 2025 is off to an exhilarating start. How are you doing this morning?
I mean, I'm happy as a pig in slop. The traders are back this week, even though we took a little impromptu break yesterday to kind of pay condolences to President Carter passing. I mean, traders are back, and it's nice to see some volume validation to the price action.
That's right. We got volume. We've got some economic news. We've got some natural disasters taking place in the week. We had the presidents getting together yesterday. This morning, we've got the sentencing of incoming. I mean, there's a lot of information coming into the system. What of all that? I mean, I think this morning's job employment is really what a lot of people were waiting on.
Yeah,
What else? Yeah, I mean, I guess maybe let's take it to the beginning of the week. When
sure.
investors find, because we were looking at that January 6th date as like the date a lot of the money was to come back into the market. Um,
hmm
did we see some of the pullback, or where did we start the week? Simply because I know we talked about that date for a couple of episodes.
Yeah, we started to see the volume come back, meaning that trading started to pick up, directions started to change. Um, Not too much. We had kind of a stall throughout the 2 weeks, the winter holiday, and the stall sort of continued. Some key, headlines were, first of all, on Wednesday, we had our Federal Open Market Committee meeting minutes. So that meeting in December where they dropped rates a quarter point. This is the Federal Reserve. They dropped rates a quarter point, overall ending 2024 with a 1 point rate drop, that they started just in September, and then they did half point, quarter point, quarter point. Um, the minutes kind of showed that there was a lot of discourse about that quarter point, and that there's a lot of focus by the Federal Reserve governors on upcoming, fiscal policy changes with the new, cabinet and president-elect president, returning president coming back. So there's a lot of caution. And then, in addition, the Fed uses their rhetoric to help us determine, what we should be doing in our own personal finances. And we've been having quite a few Fed governors, the hawkish ones, saying, hey, policy is good now. We're not going to be dropping rates anytime soon, which isn't as pleasing for investors as we want. We'd love to have the borrowing costs for money to come down. There is still quite a few dovish Fed presidents or Fed governors who are speaking out saying that, inflation is tamed. But the consensus is that, hey, the Fed probably will not be dropping rates anytime soon. And then if we can drill, you mind drilling into the employment report today?
Well, yeah, because later on we're gonna dig into this JOLTS survey,
Oh, I
which
love the
came out
JOLTS survey.
which came out on Tuesday, and you have some good points that you want to bring up there. So that's the Tuesday report. Today we got the more traditional employment report, and it seems optimistic, which is leading to more thought of less
Pessimism in the markets.
rate cuts. Yeah, so let's dig
Yeah.
into it.
Yeah. So, yeah, exactly. Non-farm payrolls. First of all, yeah, last time in November, we had a little bit of a revision down, not by much, 15,000 on the overall scope. That's kind of a drop in the bucket. But man, they were expecting only 157,000 or not manufacturing, 150,000 jobs to be created, and 256,000 were created. So, that's very positive for the employment. It means employment is hot, but at the same time, the Fed's trying to cool the hot markets. So that means that there's not going to be any more easing in interest rates, because easing interest rates would, in theory, heat this number up further. They want to cool this number. They want things to calm down. Same here. The unemployment rate dipped down. They expected it to stay solid at 4.2%. It dipped down to 4.1%. It's telling the Fed that, hey, things are hot, not cold. So your policy either is going to stay, or, some of the Fed presidents are talking about raising rates again.
Yeah, inflation is kind of on a lot of the keywords coming out in the news rhetoric today, where this higher than anticipated jobs number is going to lead to inflation, and it seems as if the governors are kind of split, and so from our perspective, I guess this helps us continue to be in this sideways market, right? Because we've talked about that for a while, where we don't know if we're probably not breaking to these new highs, anytime soon. But if we continue to be in this sideways, this is perfect for us premium sellers. And I guess you pulled up the S&P, and we'll have some strategies that we'll talk about a little bit later in the show. But does that kind of continue to be the consensus for you?
Yeah, the scoop is we got to watch a couple things. First of all, both oil and gold are creeping up. You're going to see it soon. When oil prices start to creep up to I think it's trading now around 77. When it gets to the $80 range, we start to see it at the gas pumps, and people have been complaining. Well, they're going to complain a lot more because gas prices are going to go up. So we got to watch oil. We got to watch gold. People are starting to make decisions in their investment portfolio. We're seeing a weakness in the S&P. Now, the first thing I want to do before I jump into my usual retracement analysis is let me turn off a lot of these indicators and do something else here. I want to bring up an old friend of ours. It's called the equal weighted S&P 500. So the S&P 500 is an index SIP where, each company gets a certain percentage depending on how big the company is capitalized. So real large caps actually steer the S&P 500 index more than the smaller of those 500 companies. But then we have this other index we can look at called the S&P 500 equal weighting, where they give those 500 companies equal weight in the mathematical formula, which is the S&P 500 equal weight. So this looks great. I mean, it's just a chart, but here, let's overlay on top of this the regular S&P 500. You'll see where I'm going in a second. So in the purple is our S&P 500. Now, until about the beginning of December, they were kind of in line. Do you see that?
Yep.
And I actually want to bring your attention. I'm going to go back a whole year here. The last time you and I were talking about this was over the summer, where all of a sudden the S&P 500 broke out from the S&P 500 equal weighting, meaning that all of a sudden a whole bunch of money was flowing into just those big stocks. That's what this is telling us. When we see kind of this distance between, I'm going to see if I can highlight it here. When we see this distance between the S&P 500 and the S&P equal weighting, we know that people all of a sudden are putting their money only into those big companies. We're probably talking about 5 to 10 companies. I know Nvidia is one of them, Meta's probably one of them, you
Apple.
know, Apple, maybe Amazon, Jeff Bezos, Tesla. So that's a little bit concerning when money moves out of the rest of the 490 companies and into those 10. It corrected. At the end of the summer, it corrected, and you and I talked about it. You can guys can go back and watch that show. Well, look at what's happened again, starting in December. Huge disjunct, a whole bunch of money flowing in. Now, I've got my theories, and my theories are just that, of what's going on here, but I feel like this needs to correct, and a little bit more money has to be distributed along all the companies instead of everybody focusing on those 10, because if you reduce the number of eggs in your basket and the remaining eggs disappoint, I mean, there's going to be a reckoning, right? And I think that's what we might be seeing.
And and I know Nvidia is definitely in that combo because out the gate this year they hit all-time highs again. There's a CSS conference going on in Vegas
Sure.
where they were the keynote speaker. And so if we're trying to close the gap, or if, I mean, I guess we're not trying, but if we expect the gap to close, that means that the overall market probably has to drop more than average in order to make up the difference.
Well, and what happens is when money flows out of those high flyers and then flows back in, they kind of come up to meet each other. So you're not going to expect the S&P 500 to drop, 400 points. At least I hope not. Now, people have been looking at the yield inversion curve that has normalized again. So that's meaning that the 10-year bond is all of a sudden back up. So there's all this talk. Now, again, that might be a whole nothing burger as well, because the 10-year yield is being influenced by the quantitative tightening that the Fed is doing, which the Fed has never done before. So I don't think that we can, say that the normalizing of the yield curve is going to bring on a recession like it has in the past, because there's another variable that is introduced into the mix. But all of these signs, gold going up, oil going up, the S&P equal weighting compared to the S&P 500, having a huge gap, the yield inversion curve normalizing, it's getting people antsy. It's getting people scared.
I do keep hearing bonds, the 10-year, not even just in the US, but across the world is having fluctuations. But can we bring it back to your retracement? Because I know that your retracement analysis, because I know a lot of our viewers appreciate that. And the sideways chop is something we discussed last week, the week before. It
Sure.
continues to be in play now, although we are looking today to potentially start to make new lows for the year, which I mean isn't much for 10 days. But your thoughts on, well, I always like to look at your colors to see, where we found a bottom, and I think you've confirmed this the January 2nd bottom, or we're starting to.
Yeah. So January 2nd, we had a low close right here, this guy. But that wasn't confirmed, right? You see my green arrow came, and then as soon as my green arrow came, the red arrow came one day later, and we don't count that as a confirmation. We want to see a green arrow followed by at least a couple days before it reverses. So that left us, if I can go back to my other overlays, that left us saying that that low on January 2nd may not be as low as we go before we reverse. And sure enough, what we're seeing today is exactly that. We're seeing that we're going lower than we were on January 2nd. And Yeah, it's confirming everything that I've been saying. So this was just a little foray of the last minute of those traders, and as soon as we had headed coming back, this was Monday, Tuesday, Wednesday, and today is Friday. They're course correcting, right? So now the question is, based on my retracement analysis here, I'm gonna try to make it as simple as possible. The question is, how low do we go? So my rulers are set up with some specific levels. And if we keep moving into the red levels each time, that's called sideways chop. I love sideways chop, by the way. But you'll notice that we're flirting with this time around going all the way into my green level. Do you see that, Sip?
Yeah, I love that green level because that's kind of like that next layer of, well, what's going to happen? We need to see confirmation one way or another at close.
Hmm. But this is a green level to the downside. So again, one more piece of evidence stacking up that we may be in for a correction. We may be in for a reversal. We may be in for a temporary recession. Any one piece of that data that I was looking at, yield inversion curve, S&P 500 gap between equal weighting and the capitalized or the cap weighted index. Any one piece standalone wouldn't have convinced me that we might be in for some reversal territory. But when you stack them all up and the list starts getting higher and higher of all these planets aligning, I don't know, Sip. I'll see what happens at the end of today. We're flirting with this green zone, red zone. But if we wind up having our next bottom reversal in this lower green zone, that's telling me we should buckle up for some bears jumping out the window.
Yeah, and I believe we talked about it on a couple episodes ago where even a 10% correction in theory over a 1 year to 2 year window wouldn't be so bad because we're not so overextended. But the beautiful part about your approach and the trading trader community is using this wonderful tool of options to take advantage of either the drop or the sideways chop or just time in general. And then we'll also be having earnings season come back around fairly soon. A
Couple
new
weeks.
a new president, new policies, and not to mention global warming really kicking into effect to start the year, in
Yeah,
all
by
parts
the
of the
way, are
country.
you okay?
Everything's good over by me, but having a
You had a,
West
a
Coast,
couple of you had a couple of days of scariness.
well, it's just scary to see that, like when they compare the maps. I mean, the Pacific Palisades was the biggest hit of the fire, but when they compare the maps, it's like the size of Manhattan that was just wiped out by a fire, which is no small dent to the overall economy, especially in a fairly affluent neighborhood like that. So and it's starting to snow, in Atlanta. I had a friend that was, it was just kind of a rarity there in terms of like snowstorms. So a lot of things having an effect, but ultimately, for us traders, investors, we want to position ourselves in a way to protect ourselves. One, and your options, tools, and strategies are great for that. But if we do turn, then we could even make a little bit of profit, maybe
Oh
make a
yeah.
lot of profit, right? So
My
that's
my philosophy, Sip, has always been to have the tool chest with all the different tools in there so that no matter what situation you throw me in, I'm going to be able to come up smelling like roses. See, I feel for the investor that hasn't wrapped their head around the options toolkit. There's 27 different ways you can combine options and select options in order to make any situation work for you. If all you're doing is trading up markets or trading directional markets, I feel for you because we're entering into a time with so much uncertainty that you have to be number one, nimble, and number two, be versed in the tools that are at your disposal. Be ready to use any tool possible. And if all you know how to use is the hammer and you don't know how to use the screwdriver and the wrench, then you're going to find yourself, struggling this year.
Well, that's why we've created your AJ's Quick Links page
Yeah.
to get people in tune with all of these tools and to open them up to this toolkit. We've got access to the socials. So if you're liking what you're seeing, what you're hearing, please come on over, show some love, hit that like, hit that follow, leave a comment, ask a question if there's something that
Please.
you don't understand. We are broadcasting live. If you're watching us live and you want AJ to run through a name or you have a question specific to some of the data that we're seeing, feel free to drop it in the chat. We'll see if we have some time. Otherwise, AJ's awesome indicator, which you may be seeing through some of the rest of the analysis in the show, very simple: red down, green up, with some we've seen some pretty good success with that in a lot of the examples, but also AJ's free workshop. So we're going to be doing some premium selling strategies. I don't think we're doing too much volatility crush and rush stuff until earnings seasons comes back around. So this is a great place to go to get a first round of premium selling education and really hone in on these 4 strategies that AJ really likes to lean on in the program. Otherwise, we've got some coaching. You can learn more about the Trading Trader program. But once again, the link to this is in the chat. Head on over there to sign up. We've got a lot to go through the rest of the show. I know that we're going to take a break. When we come back, we're going to dig into the JOLTS report, which came out on Tuesday. We got the unemployment report today, so we'll get some insight on that. We've got your pick of the week. We've got our speed round and anything else that might come up in the mix. So we're going to take a quick break, folks. Appreciate you tuning in. Sit tight. We'll be right back to talk employment and to find some other opportunities to find some winning positions. So sit tight. We'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So AJ, when I looked at the notes this morning, I saw JOLTS and I was curious, how much of an impact does that report have on the market compared to like an employment report today where it has a real significant impact?
Not really that much. But I look at it for a different reason. And here's what I want. So a lot of people, like we saw, focus on those employment numbers that came out today. And all well and good, but here's a rate that I think our viewers should pay attention to. And this is the Bureau of Labor Statistics reports the job opening and labor turnover survey monthly, usually earlier in the week before the employment report is reduced. And there's a rate that I look at called the hiring rate. And you can see it right here. It's at 3.3%. That hiring rate, if you look over history of 3.3%, is a rate that is usually associated when we have unemployment up at like 8%, and that would be considered
bad.
We're in dire straits. If we had unemployment rate up at 8%, that would be dire straits. What this means is that we're finding it very difficult to get jobs. Now they say, look at table 2. So I did a deep dive and I looked at table 2. Let's see if it comes up here. There it is. And, here's the overall, that 3.3% rate. Again, abysmal. Some of the higher numbers, they do it by sector. If you're in transportation, warehouse, utilities, in other words, you drive truck, you might be able to leave your job and find another job pretty easily. 6.6% right now in leisure and hospitality. So if you want to go work behind the desk at a hotel or something, you might be able to swap jobs. But folks come to me often and they're like, "Hey, I'm dissatisfied with my job. I think I'm gonna focus on being a trader." Now, first of all, when I became a trader, or when I started trading was 1997. And I'm going to tell you, I didn't have people like me to be able to latch on to. So I took the long route of trial and error, which I don't recommend to anybody, but it was very expensive and very time consuming. I didn't really see a string of consistent positive earnings from trading until 4 years later in 2001. And I didn't grow my trading nest egg from, its current, at that time it was about $5,000 to where it needed to be to sustain. Even if I pulled back on my expenses, it took until 2005. It took another 4 years of doing consistent trading till I had a nest egg in there that I could then continue to grow, but also live off of. So I continued working at Hewlett Packard, a full time job, for 4 additional years after I was successful. My point is if you decide to leave a job because you're dissatisfied right now, you're probably not going to get rehired. That's what this number is. This is a scary number. And so I'm almost telling a lot of those folks who tell me I want to be a trader full time, if you don't have, $200,000, $300,000 accumulated in an account that you can then live off of with your consistent trading, tough it out, right? Because there maybe about a year ago this number was much higher, and I would have said to you, yeah, sure, if you're not happy, leave this job and you don't have to worry about having another job lined up. But they're not out there. And if I were you guys, I would totally pay attention to this hiring rate, not necessarily because it affects your trading, but more based on your own personal decisions. Right now is not the time to be dissatisfied with your job and to move on, because there might not be another place you can be caught to. Make sure you have something in place, and make sure before you decide to abandon everything and become a trader full time that you have amassed a big enough, nest egg that you could not only live on it, but after you've removed your expenses from it, it will still grow, right? If you're not taking money from your trading account and you're just letting it grow because your day-to-day expenses are from your job, that's even better, because then your nest egg is going to grow exponentially. The minute you start taking money out, it's not going to grow as fast. So this is just my advice for the day, for the beginning of the year. This is not a good hiring rate.
Yeah, and just from that, being around in the financial industry for 20 plus years, I know how difficult it is to quote unquote call yourself a full-time trader, right? I know we had Dr. David Bonanno on recently,
Remember
and
that?
just the psychology of that on a day-to-day basis of being up, being down, having to have that nest egg, having to pay bills with the money, losing the money, like, and choosing that as a lifestyle every single day is very difficult. And so that's why I think I would encourage everyone watching, listening, to check out AJ's program and check out the webinar and check out the coaching, because like you said, AJ, you didn't have a you when you were starting, and having a you around makes that process a little bit easier. And the strategies that you implement don't require one to sit in front of their screen all day buying and selling. A lot of this stuff is done after market close. A lot of it has very strategic entries, exits, risk, rewards. And we're going to go through a couple of those examples. But, I just wanted to follow up with being a full-time trader is a very, very difficult job. And it's going to take some time to be successful. But that's why we have the program. That's why we encourage everybody to ask questions, to join, to get involved. And that's a little bit.
And right now is not the time to be, jumping and expecting there to be a beanbag at the bottom of that window. That hiring rate is telling me you guys should stay put, continue trading in the evenings, build that nest egg, but don't abandon ship quite
And
yet.
and if you don't have a way to take advantage of any market pullbacks, options, even the most basic option strategies are a great way to get involved. If you have a
Betcha.
401k, an IRA, some of those longer term positions, the premium selling is a beautiful way to kind of support and hedge yourself. As we went over in the retracement, there's a lot of bottom left. So we don't know where that bottom is, and it's either an opportunity or it's going to work against you. So thank you for running through that JOLTS number there. We do have your pick of the week, which I believe we discussed not too long ago on a potential opportunity. So let's take this knowledge in these option strategy tools and see if we could put it to work in real time. So AJ, your pick of the week this week is Pinterest, ticker symbol PINS. What do you like? What did we look at? Did we get a signal triggered?
Yeah, Pinterest is the gift that keeps on giving. My goodness, I am so stoked. So I'm going to feature it again. I mean, this thing has been going for us since the end of the summer. I've pulled at least 4 incomes off of this. So 4 returns greater than 10%. And I've done maybe 6 adjustments over the last 6 months. So 1 adjustment trade per month, uh, when you average it out. So it's setting up again. We also featured it when we were looking at it for the last time we got a top. It did exactly like we said. We shorted it and then we sold our put premium, bought a protective call. It's doing it again, folks. Let me zoom in and let's review this a little bit about what we can do here. So you can see that a top is forming. I did not get my signal. I'm using the fast MACD here. So the fast MACD is a 619.3 settings on the MACD indicator. I didn't get my fast MACD top, and I'm glad I didn't act on anything out of emotion because it looks like that top was not possibly the top. It looks like we're coming back for a double top. So that's great. But what we can do here once we get our signal is we can short Pinterest, and I would short it in lots of 100, or we could buy a deep in the money, far out in time put option. And I'm thinking the Pinterest September 42 put. That looks like a good substitute for shorting the stock. And if you use that put instead of shorting the stock, it's a cash trade. You don't have to worry about all the additional logistics that go along with a margin trade. So I'm really excited about Pinterest. If you have been trading Pinterest for the last 6 months along with me, and you're in the opposite side of the equation, meaning you went long down here at the bottom, you either bought stock or you bought deep in the money, far out in time call options, then when we get this signal, you're going to be looking to sell your near term at the money call premium and buying your protective put down here with a strike price around where your cost basis is, where your break even price is, where your level of support is in the channel. Either way, this has been a sideways channeler, really reliable, and has been giving us incomes for the past 6 months. it's been, the gift that keeps on giving, and it's setting up again. So I wanted to make sure everybody's got a heads up to it.
Yeah,
Sib.
and whenever we see those range bound names, I know there's a few in the portfolio that you kind of have seen that similar trend for weeks, months, if not years. This is a
Mhm.
great way to kind of write it up, write it down, put your protection in place, collect a little bit of premium.
Yeah.
Probably a little bit more.
This is paying double digits every month.
Oh,
Show me an investment where you only have to do like one maintenance trade a month that's giving you 10%, 12%, 18% in one of these Pinterest trades every month. I mean, come on. It's easy money.
well, we might find a couple more examples because we've got some more names to run through. But
Let's
But
do
I
it.
would say that this is probably one of your more exotic names that you like, Pinterest, seeing as
Yeah.
it's kind of like a tech name and social media, but follows the patterns that you like to see, which is I think a little bit more rare for a name like Pinterest. So give
And on my soft data analysis for Pinterest, I've been paying attention to the fact that the executive team has been very um, strategic and slow but determined to figure out how to monetize Pinterest, and they're doing well. Their earnings, it's now a company that makes positive earnings every quarter. So they're doing the right things as a company. Um, they're not going anywhere. It's one of those stocks that is perfect for our watch list. So even if you're not going to start trading it, Pinterest should be on your radars.
Okay, and as an advertiser, they're doing all the right things and they're unique enough in the social media space to kind of separate themselves from the YouTubes and the
That's right.
Facebooks and the Instagrams and the TikTok that might be banned in a couple days. Like that could be an opportunity for Pinterest to
It may just shut
take some
off
market share.
January
So
19th.
that's AJ's pick of the week, Pinterest. We did get a name from one of our live viewers, Doug here. Ticker symbol ARKG,
Let's
which
take
is
a look.
Geonomic Revolution ETF.
It's doing everything pattern-wise that we love, right? It's bouncing between a level of support, maybe I mean, I apparently I looked at it before because I had identified support and resistance at 24 and 27. It looks like support maybe has dipped down to 23. I think resistance is holding somewhere around 27, maybe dipped down to 26.50 or something like that. But otherwise, yeah, I mean, and the signals look solid. You might have to. It looks like it's moving a little bit on the faster side. So maybe combining our traditional like fast MACD or whatever with maybe some pattern type stuff. I'm talking about like candlesticks, uh, price patterns, bar patterns. One thing I want to check out though is I'd love to check out our options lookup tool and pull up this symbol ARKG and just look at some of the liquidity. I'm going to go ahead. What I did with the options lookup tool, I know we've got a lot of users out there, and you can get access to it for free for just a little bit longer. We're about to re-release a new version of it, a new user interface with a lot more data, a lot more bells and whistles. And that one we're going to actually, if you're not currently a program participant, we're going to ask you to chip in on its development costs. But the beta version is still available. And what we do is we look at about 10 strikes around the current date. And so I like to go out maybe 3 to 6 months. So I'm probably looking at this April 2025 option. Uh, and I'm just paying attention to the option chain. So I'm noticing that it trades every dollar. That's always good for options traders. And I'm looking over here at my bid ask spreads to see about how liquid is it. So this one looks good. This looks good. This looks good. This looks good. I'm looking all around. The bid ask spreads aren't so large, except for this one guy. Man, this $25 call somehow ended the day on Wednesday uh, with kind of a large bid ask spread. So, just to verify that that was just an apparition in the data, I'll go back to Tuesday and look at the same one. So, I'm going to look at the April 25 and see if Tuesday had some crazy bid ask spread. Because if it was really illiquid, and I might have just made up that word, if it really didn't have liquidity, I'd see it on all of them, not just one rando. So here I come. I'm going to look at the April 25 and look, the numbers returned back to normal. All the other numbers, well, here's one that's off again, but it looks like, you know, it's nothing to be worried about with liquidity. So ARKG checks off all the boxes. You may need a little bit of a faster way of determining tops and bottoms to properly, like, you know, reduce the risk as much as possible off of our, simulated model, as well as increase the rewards. But man, this looks like a good one.
Yeah, big shout out to Doug. He says he's been killing it. Very good to him, he says. So
How long have we been sideways? Gosh, all the way since about April of last year. That's great. I love that.
And that's why we like to go live and bring some of these names up, because AJ doesn't have all the best picks every week. We've got a very engaged community throwing out some ideas, and we've got a couple more from the viewers out there, AJ, and they want your opinion on things. So let's dig into our speed round here. Our first name is Calvin out of Oklahoma City, Oklahoma. Interested in a unique brand that's making some shifts in their business operations. It seems like Starbucks, ticker symbol SBUX. They've been slowing down on the amount of coffee that they can sell out there in this world.
They have. I think that there's competition. I think that there is oversaturation in the markets. So they might not be as expanding as much. And from the soft data analysis I've done on Starbucks, they are going back and making sure they've got all their T's crossed and I's dotted, going back to the basics. One of the things that Starbucks is famous for, there's books written about this, is taking the process of pouring a cup of coffee and making it very theatrical and visible, so that you actually could understand consciously or perhaps subconsciously as a consumer what went into a good cup of Joe, right? Because you could buy a cup of Joe at McDonald's. McDonald's has actually also upped their games, but originally, you could buy a 40-cent cup of coffee at McDonald's, or Starbucks was offering a similar product for $4 or $5, and Starbucks was kicking butt at it. So they've got to go back. They've got to make sure that, customer service, the theatrics, everything, the experience is hot. And, they've been making progress, and you can see that in their stock price. Investors are happy. They're a little bit expensive for the type of strategies I usually do. However, we can do something, and this is a little bit more advanced, but rather than legging into a covered call, covered put, or diagonal debit spreads, we could actually leg into condors or iron condors with this one. The trick here is to make sure that you've got your risk figured out, because a condor is, basically a bunch of vertical spreads, and people underestimate the risk of a vertical spread. Vertical spreads, you can go from profiting 10, 15, 20% to losing it all in a matter of minutes. So when you size your position, make sure whatever you invest into those vertical spreads is within the amount of your portfolio that you're worth losing. So it usually means you have to make a position size that's way smaller than you can afford. And you want to do that. So risk sizing is critical. But yeah, I see a bottom here. And I think this is a great opportunity to get involved with Starbucks. If you've got a big portfolio, buying shares of stock, right, in lots of 100 might be your way of doing this. You could also do this with a substitute call option. Still, you'd need to have a pretty large portfolio to be playing around with Starbucks, trading at this, $90 range. So the other thing you could do is one of those vertical spreads, maybe do an 80-85 or even an 85-90 vertical spread. But again, they're dirt cheap, but they're also quite risky assets. So don't think because they're dirt cheap, you should buy a bunch of them. Make sure you model this out. That's what we teach in our program. Model everything out and size the position accordingly. But I could see doing something with Starbucks. I think you've identified a nice bottom here. I think you could do something with it, but be sure you know your strategy before you delve into using it. Don't be using one of these tools that's in your toolbox without actually knowing how to use that. Otherwise, you're going to mar the piece that you're working on. In other words, you're going to possibly lose some money.
Yeah, and from an operational level, the big news last year was the former Chipotle CEO came in to run the show at
Mhm,
Starbucks. So trying to implement, I think, some of that scalability or success that Chipotle has with
mhm.
simplifying their process. We'll keep an eye on Starbucks. That should be a pretty interesting name come earning season, just in terms of their rhetoric, not necessarily their results, but the trends that they're seeing, because it tends to kind of give an impression of what's going on with the average consumer because of the sheer volume of locations that they have all across the world, really.
Yeah.
So thanks for that, Calvin. All right, moving on to our second name in the speed round. Oil is a hot topic today, this week. So Tyler from Dallas, Texas wants to know your take on Halliburton, ticker symbol HAL.
Yeah. So Halliburton, they are involved in kind of managing the, you know, managing the setup of new oil drilling wells. Um, yeah, with President Trump coming in, there's a lot of excitement in the fossil fuel industry, possibly to reignite some of this activities. You got to remember though that US is the number one producer of oil right now. In fact, it's really interesting. There's different types of oil, and the US produces a type of oil that really we don't have many refineries that can deal with. So we actually have to sell our oil and then buy some of the oil that comes out of Norway or comes out of Saudi Arabia, the sweet crude, because our refinery, it's very convoluted, the whole oil market. But Halliburton gets involved in setting up either these, Permian Basin fracking, or, some of the oil wells in the Gulf of America, I mean, the Gulf of Mexico. So, yeah. Okay. Halliburton's at a bottom. It confirmed as much. Let me go ahead and zoom in here. We got our end of day signal. You can see by my indicator here showing up on Christmas Eve. But it doesn't look like we really got follow through till maybe New Year's Eve, maybe a day before. And now it's questioning. So you're questioning, are we good to go? Well, I think that if you got into Halliburton, which is at a great price here, $27, or you bought some, um, you know, substitute call options, I think you're in a good place. Here's what's happening. We're coming up to earnings. Earnings is going to be January 22nd. It doesn't look like earnings really moves the needle too much for Halliburton. So I'm not so worried about navigating through earnings, but we may be getting a double bottom here, which is not a big deal for me. If you had done your planning and you decided to go, you know, under your position size, meaning your planning came up and said, hey, you could do 400 shares, 4 contracts of Halliburton, you only did 2, look out for another opportunity to dollar cost average that position. Add the other two you didn't do, but don't go over that number. So if you did the full 4, then stick with it, even if we get a double bottom, and just be patient, right? Those initial covering positions, so long as you have your stop loss in place, we're good to go. Be patient. Don't worry about this pullback. Keep your eye on those limits. Have your, risk uh, processes in place, conditional trading, stop loss orders. Otherwise, you just stay patient. So I'm not concerned. If you want, you can take profits here and wait for earnings, whatever little profits you have, take them and wait for earnings to pass if that will let you sleep better at night. Sip, the scoop is with our premium selling trades, when you do step 1, you set up the initial covering position, that's where, there's a potential for losing sleep. Once you get step 2 in place, which is putting on the collar, the positions auto adjust. So I could see why Tyler, if he got into this position, with earnings coming, he could be a little bit concerned. If that's the case, do what's right for you. Take your, couple of percentage points of profits, get through earnings and do it again. But for me, I think I'd just stay, hold my position, look for an opportunity to dollar cost average, and then wait for the plan to unfold as you planned it out.
Yeah, and the crude price of oil's continuing to rise here to start the year. So may be impacted by some of these global phenomenons taking place in general. So we'll
Yep.
keep an eye on oil. Thank you for that, Tyler. In our third and final name, Carol out of Portland, Oregon wants to know your take on outdoor
Oh,
cooler manufacturer Yeti.
I like this one. This has not been another one of our portfolio that just keeps on giving. So, Carol, I love it. You can see here, we've been going sideways. We've been just about every month or every other month being able to take premium off of this. This one's been actually doing even better. I've been getting some of my premiums, as well as rolling out my protective options in the realm of like 20% ROI every time. So we got a signal that a bottom was found. That was on January 6th. We did not get the trading day follow through on January 7th or yesterday or on Wednesday, January 8th. And on January 8th, that signal was pretty much erased. You can see that right here. The light blue signal was canceled out by the magenta signal. So wait for another light blue signal, but this is the perfect time. So you could trade both sides of Yeti, can't you? If you're not already in Yeti, you could set up an initial position by buying Yeti stock or buying substitute call options. That could be something you do once we do get the signal with follow through. If you're in a position where you have either shorted the stock or bought put options at a top reversal, this is when you're going to add your collar. You're going to sell near term at the money, put premium, and then you're going to subsidize the purchase of call options, probably up here with your strike price, near your level of resistance, near your break even price. And if you're already in a trade where you've got your initial covering position and you've been selling call premium, buying protective puts, when you get this reversal signal, this is when you then cash out and roll out of your protective put option. It's going to be worth a lot. It's already done its duty as a protective option. So cash it out and then get ready to do the cycle all over. Yeti should be added to everybody's watch list. This is like, along with Pinterest, another one of those symbols that you could just keep profiting on. If you haven't jumped on board the Yeti wagon yet, it looks like we're setting up for another one. But again, we always wait for our signals. We don't jump the gun.
Yeah, up 1.7% today. market 3.2 billion market cap on 1.6 in revenue. So pretty solid sales numbers. A product that's, I believe, probably in high demand now, just because of travel and having to house things. So
You know what I figured out you can do with a Yeti cooler?
what's that?
Well, it snowed here in DC, and we don't get. When I was a kid in DC, it snowed like every year. Now it snows every 3 years. So of course DC comes to a standstill when it snows. DC tries to. Sometimes they're a northern city, and sometimes they're a southern city. Whenever there's snow, DC is a southern city. So my wife and I have taken the opportunity every day to go out and hang out in the hot tub and look at the snow. And we have deer in our yard, so the deer come up and hang out with us in the hot tub. Take your Yeti cooler, get some of those from CVS or Walgreens, those hot water bottles. I got 2 of them. I put them in the bottom of the cooler, and I put my towels in there. And so when I come out of the hot tub and it's freezing cold outside, you can get the nice warm towels. You don't have to. It's a nice little hack, guys. Yeti coolers are where it's at, especially in the wintertime. Keep your towels warm.
Yeah, and if you haven't already hit that follow, subscribe, like button, AJ's got some lifestyle content coming from the hot tub soon. At least that's something we've been talking about. So now that you tease everybody,
We're more than just traders. We're also, lifestyle hackers.
we're gonna need to get some market updates from that hot tub view. So
Yeah.
everyone stay tuned. I believe that covers us for the show. AJ, heading into next week, we've got this big sell off on Friday.
Yeah.
What's next on the horizon that we're going to be keeping our eye on?
Well, earnings season is around the corner. We've got, I believe, another Fed meeting at the end of January. Let's watch these retracement levels. Let's watch the price of gold. Let's watch the price of oil. And this is a perfect time, this month of January of 2025, to be going through your watch list and culling it. Making sure you've got the Pinterest, the Yetis, all those symbols that are just paying us religiously, that you could just have your, majority of your portfolio in, doing 1 or 2 trades a month to keep it maintained, paying back, double-digit returns. Let's get our watch list cleaned up, and let's just see how things develop, especially as the new group comes in creating fiscal policy. Let's just see how it all pans out.
And as always, if you haven't already checked in, hit the follow, subscribed, checked out the Trading Trainer community. The Quicks link is in the chat, so head on over there, jump into whatever piques your interest. We certainly do appreciate it. Hit that like, hit that follow, hit that subscribe button. And on my final note, I just want to wish everyone a safe holiday. There's a lot going on in the country. I was just seeing a bunch of clips of the roads in Texas, in some of those southern states.
They really don't know what to do with snow.
In Atlanta just had to emergency land. It looks like there's some stuff going on. Obviously, the California fires are still taking place. So please stay safe. Take care of what you need to, and then when you're ready,
we might be going to war with Greenland, Panama.
I'm not more of a verbal war, right? Because nobody really wants to go to war with
annexing Canada.
But did you see the tweet that Trump did, where he basically just put the 50? He covered all of Canada, and the label was like United States of America, and it was like it was just like, man, this guy just.
He's a headline chaser. In my family, we call them poop disturbers, but we don't say poop. He just likes to. He's one of those people that likes to needle, right? And I think he may have caused. I don't know. It's just speculation, but the Prime Minister of Canada had to step down. He's just a poop disturber. But I did see that Canada came back and said, well, why don't we do a swap? We'll take California and Portland and Washington State, and you can have Manitoba and Saskatchewan. So whatever. It's just going to be a fun 4 years. I can tell you that, because the headlines are not going to be, they're going to be sensationalism, right?
And we shall change the name of the Gulf of Mexico to the Gulf of
I know.
America.
I kind of made a joke about that earlier. The Gulf of America. And we're going to, by military, take over the Panama Canal. I love it.
One way or another, he is our president. We are a united country, so we got to try and stick together as best as we can. But here at the Trading Trainer Community
Just
Program,
poking fun.
We are here to help each other's portfolios increase, to help educate, and to keep everyone ahead of what may be coming in the next few weeks, next few months. It's definitely an exciting start to the year. Let's see if we could take advantage of it and continue to grow this amazing community. We've been doing this show for about year 3 now, so a lot of content, and we continue to appreciate everybody tuning in. So that's all we got from our end today. AJ, stay safe, stay warm. Everybody tuning in, feel free to once again hit that like, hit that follow, hit that subscribe button. If you have any questions, reach out to the team, hit us on the DM, leave a comment. Someone will get back to you as soon as we can. Otherwise, stay safe, and we'll see you guys next week.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll